Hey everyone, welcome back to Earnings Call. I'm Jeffrey Beamer, Senior Investment Strategist over at ewotrader.com. And if you've been with us for a while, you know we don't just talk about stocks, we talk about how to profit from company earnings. Now, this week, the beginning of February, it's Monday, February 2nd, 2026. This month, we have over 2,100 companies declaring earnings over the course of the month. And this week, we start with over 490 companies releasing earnings just this week. So this could drive volatility and sector rotation, and we could see some real movement in the markets depending on results. Roughly one quarter of the S&P 500 reports just this week, highlighted by major names such as Walt Disney, Palantir, Advanced Micro Devices, Alphabet, PayPal, PepsiCo, Amazon, Qualcomm, ConocoPhillips, and many others. We're going to go through our list, and I'll tell you about how we filter through all these stocks. And we'll look for potential trade candidates, which I'll talk about. And I have another new opportunity for you at the end of the show. So let's get going. Okay, as I talked about each and every week, we talk about making money off of earnings, okay? And we do this in two different ways. We have what we call breakout stocks. And of the list that you see here on your screen, that's on the left-hand side of the ledger. And on the right-hand side, we have what we call quiet stocks. And this is where we sell premium. We sell options to capture the decline in implied volatility that occurs after the earnings announcement. Okay, so these are quiet stocks. Now, how we define these is breakout stocks is really anything 10% or double digits or more in movement, in stock movement. Okay, it has nothing to do with their results necessarily, but what the stock actually does. And quiet stocks are stocks that move just single digits. Okay, and you'll be amazed at how quiet some of these companies move. They just don't react to their earnings. Okay, so let's get started with our list. Look, we're going to start with the quiet list. All right. And what I do, let's go ahead and pull up the list. What I do is, here's an example. I forgot. Pfizer. Okay. Pfizer has earnings actually the next week, tomorrow, February 3rd. You will not see Pfizer on our list for this week because it is a quiet stock and it moves just a couple of percentage points. In fact, you can see from the chart, the stock just doesn't move at all, really. Okay. But it's a $20 stock and it's hard to do the strategy that it can be done, but the strategy we like to do, which is called an Iron Condor, it's hard to do that on a $20 stock because of where option premiums are. Okay. It can be done. And Pfizer is a great candidate, but it might not be the best. So we're going to go through our list of what we have determined to be the best over time. And here's our list. And you're going to see many familiar names. And you'll actually be amazed at what names are not on our list. And I'll actually touch on a few of those at the end of this section of our show. But here I like to go to the charts. Okay. And we talk about movement. Now, we're going to start off with Disney. Now, Disney had earnings. They declared this morning. Okay. So today, February 2nd, they declared earnings. The estimated move on Walt Disney is about 8%. And you can see here on the chart that at the time of this recording, Disney was down about 6.92%. All right. Right around 7%. So it moved within that estimated move. Now, these moves are not what we determine. This is determined by option market makers, okay, by the market itself and how they are option market makers are pricing for the potential move. All right. And they're pretty good at it. All right. So 8% or less is usually where Disney moves. So, yes, it's a big gap down, but actually, it's right in line with what option market makers were pricing for a move in the options, okay? So, continuing on through our list, and again, this is our quiet list. We're going to look at Tyson Foods. Now, here we have a stock that's $65. Now, our strategy, well, it's not our strategy. Iron Condors are well known. Many thousands of option traders trade them, okay? Really, $50 to 200 is the real sweet spot. It can go up to maybe 500 before strike spreads get too out of control, meaning stocks with that are priced 500 and above, oftentimes their strikes go every $10, and that makes the margins a little bit more expensive. Not unruly, but we base our trading on a $10,000 trading account. So we're risking no more than $500 usually on a trade. And therefore, I don't like to go over $5 with spreads. Okay. So with that this is Tyson Foods. So again, they're going to declare. They declared this morning also. And look at this, they moved very little, 54 basis points. So they really did not move at all. So well within the 6% that the option market makers were pricing the options. So this would have been a pretty nice candidate. Now, moving on through our list, because we got a lot of stocks to go through, so we're going to speed it up here just a little bit. Simon Property Group declares on Monday, today, February 2nd, after market close. The average move here is just 4%. And you can see how this stock has consolidated just in a range, right? If I can move my rate down to $5 wide increments here, you can see this is just a nice little sideways trending. It did have a good day last week, and it is rallying. I'm not so concerned with the rallying. I'm just concerned with what this stock does through the earnings announcement. And really 4%, you can see back here, this was actually just under a 4% move back here on this most recent announcement, but they will declare today after market close. Now, as we start getting through the week, PepsiCo, usually on our list of quiet stocks, okay, they're going to declare tomorrow, Tuesday, February 3rd, before market open. The average move here is 5%. Okay, so this is a $155 stock. Normally, we find decent candidates for selling premium, and we do this through a strategy called an Iron Condor, as I mentioned, just to save on the margin requirements. We don't sell options naked because of the margin requirements. Okay. Now, moving on is Prudential. Prudential Financial will declare tomorrow, Tuesday, February 3rd, and they will declare after market close. Okay. After market close for Prudential, the average move here is just 4%. This is really a pretty quiet stock overall. It has small moves during the day, and occasionally it'll have moves related to news. But again, through earnings, we just see a very quiet move. Here's just a small little pop that it had of a couple of percentage points, not even the 4% move that it averages. All right. So we're expecting nice results from Prudential as far as selling premium. Okay. Another candidate is the CME Group. Okay. Now, Chicago Mercantile Exchange, okay, CME Group, they will declare Wednesday, February 4th, before market open. The average move here is about 4%, and that's what's being priced in on the options. And again, getting up towards the upper part of our sweet spot here. Really what happens when you get a stock priced here at 289, once you go, like CME, I know has options every $2.50 up until $300, and then it's every $5. Okay. That can sometimes cause a problem when you're trying to, let's just say, control your margin requirements, and you do a $2.50 wide Iron Condor, and then all of a sudden the call strikes are now every $5, and you can do that. Not a problem. It's more called like a broken wing Iron Condor is really what that is. All right. So here we go for Google or Alphabet. Okay. They will declare Wednesday, February 4th, after market close. Now, believe it or not, the average move for Google is about 6%. Okay. The stock just doesn't react here. Last time, look at this nice little move here. After earnings, the stock gapped higher and then closed down a little lower. This was like a 2% move, 3% move for Google. That's typically what it does. Okay. Or for Alphabet. and we're expecting nothing different this week, although it is in the news a little bit more here recently. So watch out for Alphabet. I would try to get something at least $10 wide on my break evens. Okay, $10 below, $10 above, um, and or 10% below, 10% above, to be safe. If I could, if I got the premium to sell. Okay. Now ConocoPhillips, they're going to declare on Thursday, February 5th, before market open. The average move here is 3%. So a big company here, and you can see their last earnings event. You can barely tell they had an earnings announcement. The last earnings, the stock moved so little. So yes, only 3% for ConocoPhillips on the expected move here, for them. And then Shell, couple of oil companies here. Shell will declare on Thursday, as soon as it pops up, Thursday, February 5th, before market open. And believe it or not, the average move here is just 2%. And you can see this stock gaps around a little bit, but look at the last earnings announcement. It just looks like it barely even moved. And yes, that is the earnings announcement. It's not this mess back here. This was the day, October 30th was their last earnings announcement, and it just doesn't move. And we're expecting that same thing off of Shell for this round as well. All right. Getting towards the end of the week, beginning on Friday, we just have a couple of candidates here. AutoNation, they will declare Friday morning, February 6th, before market open, and the average move here is 5%. Okay. AutoNation is usually pretty quiet. Now, occasionally these stocks will find a little bit more volatility, and you can see that, it moved just, nicely on the day, but then the following day it had a little follow through, actually the following 2 days. And that can happen sometimes. Okay. We like a nice quiet announcement and then the stock to continue to do its thing. So, probably watch AutoNation, but it just depends on the pricing. All right. Toyota Motor Company also declares earnings Friday morning. That's Friday, February 6th, before market open. And the average move here for Toyota is just 3%. Again, these big companies, sometimes it takes a lot to move them. All right. And just 3% is the estimated move here. And finally, last of the quiet stocks, we have the SIBO, okay, Chicago Board of Options Exchange. SIBO Global Markets, they will declare Friday, February 6th, before market open, and the average move here is just 4%. Okay. But another good candidate, SIBO, other than the spreads, believe it or not, SIBO, of all stocks, their spreads are a little wide between the bid and offer. It makes it a little difficult. That's why we use limit orders specifically. But yeah, of all stocks to have crazy spreads, you would think SIBO would get that under control. But hey, it is what it is. Okay. All right. So that is the quiet stocks for this week. And these are the better of the candidates. There are some that are not on our list that are single digit movers, and they're just not on our list because maybe they move 7 or 8% or 9%. Those are the estimated moves. Okay. Just not, these are the better ones. Quieter, the better for this particular strategy. Okay. All right. So moving on here, we get to the side of the ledger where people really, these are the fun stocks. These are the fun stocks to watch anyway. And these are the breakout candidates. Now, let me show you an example of a breakout candidate. We have Akamai here. Now, Akamai does not have earnings this week. They don't declare until Thursday, February 19th. Thursday, February 19th, after market close. That I'll update this chart at that time. But you can see this stock gaps around, and it gaps around double digits. It's very consistent with its moves around its earnings announcements. Okay. So Akamai, as I mentioned, does not declare this week. It declares in 2 weeks. All right. And we'll keep an eye on it, but it's a great example of what a volatile stock looks like for our breakout candidates. Now, what type of strategy do we do here? We don't do Iron Condors on these. We buy options around these moves, straddles and strangles. Okay. Buy call, buy put. Straddle at the same strike price, strangle at 2 different strike prices. I mean, call at one price, put at another strike price for a strangle. Okay. Same expiration date. All right. And yes, we typically are buying more expensive implied volatility because IV rushes into the options near the earnings event, but these stocks move so big that usually we go in the money once the stock breaks out, and that then IV doesn't really matter. So when a stock has lots of intrinsic value, all right, it matters very little. So that's why this is such a great strategy around these big movers. Okay. So let's get to our list for this week. Okay. Our list is a little quieter than the quiet stocks. As you can see, there's a couple of days where there's only maybe two candidates, and then Friday we don't have any. And that's really based upon, again, consistent movers that move double digits around their earnings. So let's jump to the charts real quick, and we're going to begin with Palantir here. Now, Palantir typically is a mover of double digits and not quite as much as you think. It does move around 12%. That's what's being priced into the options. And you see here, this is a $150 stock. Now they're going to declare later today, okay, Monday, February 2nd, after market close. And we expect a double digit move. Now, with all the news within the tech sector, anything that does, especially that deals with memory, they will usually move a lot more than their estimated moves. Palantir, definitely one to pay attention to. They're pricing for that movement right now. They're pricing in about a 13-14% move for this stock. And so it's a little hard to make money when they're priced above their average move. But Palantir will declare later today, and it is a stock to watch. Okay. Now, moving through our list here, PayPal. Boy, PayPal's really been selling off. They're going to declare Tuesday, February 3rd, before market open. So tomorrow morning, the average move here is 11%. And this stock does tend to move around. It gapped higher last earnings announcement, but then sold off during the day. But previous moves, you can see here, stock was previous earnings announcement back in July, the stock opened up at $78, and then the next day opened up at $71. So you have a little over a 10% move there on a stock. So that's right where PayPal is being priced, is for that 10 to 11% move. And they're pricing that in right now. I would definitely check on it later today, but I did before we came on, and they're pricing for that move. So it's kind of hard to get that edge that we're looking for in a potential breakout. All right. All right. Also declaring tomorrow, and this one is priced for this move, okay, is Enphase Energy. Now, this stock typically is a mover. They're going to declare tomorrow, Tuesday, February 3rd, after market close. The average move here is about 15%. Yes, this stock jumps around. You can see here, last earnings announcement, stock opens up at $37. Next day, the stock opens up at $31. That's a $6 move on a $31 stock. You're talking about that's a 20% move right there. And, oftentimes they're pricing for it. In fact, I priced a trade before the show this morning. I priced a trade on Enphase using a straddle or strangle, and option market makers are pricing in for about an 18-19% move right now. So a little hard to get an edge here on Enphase Energy, but definitely one to watch. You'll want to watch that one. Now, Super Microcomputer, they're going to declare tomorrow, Tuesday, February 3rd, after market close, and the average move here is 12%. Okay, they are a double-digit mover as well, but you can see last earnings, and I remember talking about this back in November. We had this nice little wedge going into earnings, and I really liked that. We did do a trade on this, and it dropped a little bit after the earnings announcement, but then the following days, that's where we made our money, is really on the follow through on this particular stock. So we're looking for a bigger move here after market close tomorrow, Tuesday, February 3rd. And again, we're looking for a 12% or bigger move for Super Microcomputer. Okay. Now, another good consistent mover is Elf Beauty. All right. ELF, Elf Beauty. They will declare, oh, where's my banner? There it is. All right. They will declare Wednesday, February 4th, after market close. This stock has an average move of 30%. Okay. 30%. Yes, this stock is a mover. In fact, look here. Okay. Last earnings announcement, you opened up at 115. All right. And the next day, you open up at $89. So from 115 to $89 in a day. Okay. That is a, that's a big mover. And the thing is about these, it's a little hard to find your edge because market makers are pricing in for that move. Sometimes they get it right, sometimes they get it wrong, and that's where we get our edge is, usually when they get it wrong. And one of the things that we do for our subscribers, those that subscribe to our publications that we send out, is I do all that research for you. Okay. I do all that research for you and then send out alerts for a potential trade. In fact, I'm going to give you one here in just a moment. So stick with me. We're almost there. All right. Getting through our list, we just have a few more names to go here. Symbiotic, they will declare Wednesday, February 4th. We're not to April yet. February 4th, after market close. And this stock is a mover as well. 20% is the estimated move here. And you can see the last earnings announcement. Look at this stock pop on that earnings announcement. Just boom, big mover here through the earnings announcement. That's what we're looking for and how we make our money on Straddles and Strangles that we do through the earnings announcement. All right. Now, another familiar name is a meme stock, okay, is Roblox. They will declare Thursday, February 5th, before market open. The average move here is about 16%. So not as big as it used to move, okay, but still a mover, around 16%. You can see a nice solid day. This actually did move right around that number on the last earnings event. Did have some follow through, which is how a straddle would have made its money, but definitely a nice mover through its earnings announcement. And we're expecting that again Thursday. So we'll be watching that for Roblox on Thursday. All right. Okay. And winding up here, we have a couple more here. Affirm Holdings. This is also a mover. They will declare Thursday, February 5th, after market close. The average move here is 15%. Okay. 15%. Now, look at this. Last earnings, it did not move that 15%. That is the risk of doing a straddle or strangle around these earnings event, is when the stock just has mixed results. Their outlook is and the stock just doesn't react. That does happen. Okay. But then again, you get other announcements where you do get that gap and that here's a big wick. It didn't move on by the close. It hadn't moved its estimated move, but you can see the big wick that, yeah, it moved that estimated move during the day on that previous earnings announcement. So we're still looking for a big move on a firm. This is a financial company, okay? And they've been interesting performers here. All the financials that are not investment banks have been selling off. Only the good quality financials that are like investment bank related, they're the ones making money right now, and their stocks are doing fine. All right, I just have three more for you. Names that are familiar but didn't make our list for one reason or another, but I did want to hit on them. We're going to start with Chipotle. Now, interestingly enough, Chipotle is quieting down, and stocks will do that. They will get more volatile or less volatile over time. Chipotle will declare tomorrow, Tuesday, February 3rd, after market close, and the average move here now is 10%. This stock used to be a real mover. I mean, we're talking 18, 20%. And not so much. It's quieting down. All right. So right now, a 10% move, and I'm not so sure it's going to even move that through this earnings announcement. So you'll definitely want to keep an eye on Chipotle for this week. Then we have Uber. Uber will be declaring Wednesday, February 4th, before market open. So first thing in the morning, the average move here for Uber is 8%. So you see, this is why I didn't make our list, but it's still a familiar name that a lot of people still talk about. And speaking of names that people talk about all the time, we're going to close out our list with Amazon. Okay. Amazon does declare this week. And look at this, option market makers right now are pricing in about a 7 to 8% move for Amazon, who declares on Thursday, February 5th, after market close. So Thursday night, Amazon will be declaring, and we expect to move considerably less than 10%. It'll be fun to watch what Amazon does, being the big company, and it can still move the stock. But a 7% move, even a 6 to 8% move is okay. Nothing really noteworthy there for Amazon. This is getting down. This is starting to quiet down as well. And if Amazon gets down to about a 5% average move through earnings, this will be a great stock to trade with an Iron Condor. But I don't know about this week. We'll see. All right. So closing out, let's take a look at our list one more time, and you'll just see some of the names. And this is why, Chipotle and Uber and Amazon did not make our list, just because there were better potential candidates out there. And that's what we like to focus on, are the best candidates each and every week right here on Earnings Call. All right. So as we do every week, we talk about trades. And I start off talking about the trade that we did last week. All right. And now I have a new opportunity for you. All right. So let's go over and take a look at what we did last week. We did a strangle on VF Corp. Okay. VFC. And we were looking for this stock to either pop or drop. All right. And a strangle was going to give us the best opportunity for that. And just like I talked about a little bit ago, the risk is if the stock just doesn't react. And the worst thing that can happen is for that pop or the drop and then a reversal. And that's exactly what we saw here on VFC. Okay. So the result was a small loss. All right. And the stock gapped down almost to our break even, almost to the break even, and then started to rally throughout the day. And we took our position off around midday, early afternoon, as the stock was rallying back up, and ended up with a loss of $119. Now, I like to show that based upon a portfolio, that's just a 1.9% loss. Actually, that's a 1.19% loss, not a 1.19, my error there, 1.19% loss on portfolio. We can make that up with one trade. Okay. We can easily make that up on one trade. In fact, we had a winner last week that was more than this loser. So, we're still up a little bit over the past 2 weeks. So this happens every now and then, but normally, we have a good track record here, and we're going to go back to our guns once again, because we made a quick exit and we still have capital to burn. So let's take a look at a new opportunity for you this week on Pinterest. Okay. Now, Pinterest doesn't declare this week. They declare next week. This is a special opportunity because Pinterest also were jumping in a little early to try to catch that wave, that implied volatility rush into the options. Now, when we enter a trade early like this, okay, with about 10 days till earnings, okay, we can catch that rush of implied volatility and make money on our trade before the earnings event. But Pinterest also is a mover. So depending on, hey, if it doesn't move enough for you, for us between now and then, as far as implied volatility, again, the stock doesn't have to go anywhere. It's just the implied volatility rush making the options that we already own more expensive. So essentially, we bought low, we'll sell high. Okay. That is a potential opportunity here. We'll talk about this next week. That's why you'll want to come back and see how our trade on Pinterest is doing, because this will still be open on next Monday. We want to take a look at it, and we'll see how it's performing. But then we might hold on to it through the earnings event, which will be next Thursday, a week from Thursday, after market close. Okay, so that is our extended show this week. Again, about a quarter of the S&P 500 is declaring earnings this week. Big week for earnings. We talk about it each and every week right here on Earnings Call. Thanks for joining us. Everyone have a great trading week, and I'll talk to you again next Monday. Take care.